Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Parsati. And JSEC yields fall after touching highs in the last couple of weeks. And will this continue? Will this yield fall continue? A lot of negatives started the year. The government issued the new 10-year bond, the 710-2034 bond, the where after touching lows, the 10-year benchmark after touching lows of close to 7% in end of March, saw that the first auction for the new 10-year benchmark bond, where the yields were higher at 7.10%. And this yield actually continued to rise, going over 7.15% in the last couple of weeks. But in the last 2 days, we have seen the yields fall very sharply, and the 10-year GSEC yield has come down to closer to 7.05%. Now it's trading at around 7.07%. Will this continue? We have seen in the other auctions the new 39, that the 15-year bond was auctioned, and there too the cutoff was higher than what it was trading earlier. But we've also seen the longer term bonds where the 40-year bond, where the cutoff has been in the range of around over 7.3%, indicating that the curve is actually very flat, and long-term yields have been at the longest end of the curve have been extremely stable and low as compared to earlier levels. And this indicates that the market has put a lid on where yields can go at least at this present. And the question is, where can it go? How further down can it go? A lot of positives and negatives on the horizon. Clearly, one is that in the earlier Fed meetings, where they have sounded pretty much hawkish in terms of making sure that inflation is coming under control, but hence they have not started to talk about the timing of rate cuts, if at all, and that has taken markets by surprise a bit. And U.S. Treasury yields have had risen down over to 4.6%, 7% also on hawkish Fed comments. Uh, and also in India, we saw that there was a bit of nervousness on rise in crude prices because of geopolitical reasons and many other political the elections ongoing elections and all that. So everything put together, we have seen a few nervousness in the market. So that saw a bit of selling by traders, which took yields up, and that's one of the reasons why GSEC auction yields also went up. But in the last few days, we have seen some positives that is coming through. One is that on the global front, there is more talks of Fed rate cuts that could happen this year. Now, what triggered that could be some of the recessionary concerns in the U.S., but that doesn't seem to be holding true given that the jobs market have been extremely strong. But that's the market belief. Second is in India too. We have seen the government has announced a buyback of bonds. They are to be holding the buyback this week, and for about 40,000 crores of bonds they are looking to buy back, which indicates that the government finances are high. And since the first quarter will not see too much of spending happening, given elections and other things, they are preferring to park the buyback G6 rather than keep the money idle. So that is one positive. So that adds more liquidity in the system and takes away the bonds that from the banking system, and the increase leads to higher demand for bonds for G6 in the auctions and in the market as well. The third is that as we go closer to June, there will be starting the FII investments in bonds will start to happen, and that too is getting to be pretty much a positive sign as we go into the next couple of 2-3 months. So hence the GSEC yields after touching highs did come down sharply. The question is now whether will this go further down in the next few weeks, or will it stay in a range bound manner? Remains to be seen, but on a longer term trends, um, um, the direction of G6 will be determined by one is what's happening on the new government and its new budget that will be in June and July most probably, and whether the government will show higher spending in the new budget or will stick to the fiscal consolidation measures. The second is whether the inflation can be continue its downward trend. We have seen Indian CPI, headline CPI coming down from 7% levels to closer to 5% levels and slightly below. And core inflation, stripped of food and fuel, we have seen that coming down from 6%, which was very sticky for a long period of time, to around 4% levels. Now, will that also continue to remain sticky? And also that a large amount of liquidity flows have been flowing from portfolio flows happening through into the equity markets. Would that lead to some kind of a strong liquidity driven inflationary trend? Now, so that's some a few more concerns on inflation and obviously the monsoons and food prices as well, and geopolitical factors. These are some control on inflation, some concerns on inflation. But having said that, if things are even at these levels, if everything is like more or less normalized, inflation trend is closer to RBI's forecast of 4.5% for this year. And the second is that if the government is continuing on its demand fiscal consolidation path and the economy grows, there'll be more demand for G6 from across the system, including the global investors, and that lead to the sustained fall in G-Sec yields. And obviously, if US Treasuries and the Fed continues to show some kind of a turnaround in their hawkishness, that is, showing signs of maybe a rate cut end of this year or closer to next year for beginning, then that could also drive GSEC yields down. But in the near term, looks to be range bound rather than studied sustained downward trend. And this helps in building investors to build long-term GSEC portfolios. GSECs, as we all know, offer a zero credit risk because they're issued by the government of India, and liquidity is very, very high in GSEC. So investors at any point of time can sell GSECs and get money the next day, the moment they sell. They can always get a price for their sales. And the third consideration is obviously if long-term GSEC yields fall, the price rise is very sharp and investors can make a good amount of capital gains. So GSECs should be in a is a good investment for any investor's portfolio looking for safety, liquidity, and steady to higher returns through capital gains. Obviously, when the outlook for interest rates is lower, then long-term G6 made sense. But on the other hand, if outlook for interest rates is higher, long-term interest rates, long-term G6 can show that prices can fall, so leading to capital loss. So investors have to be very clear that long-term interest rates outlook is lower. So that's about it. If you're a financial advisor, the best place for you is INR Bonds Partner Portal, where you can get the best information on all the bonds that are available in the market, including G-Secs, and have the best of transaction experiences. Log into our partner portal and make your clients' fixed income portfolio deliver the returns commensurate to the risk that you are advising them on. Thank you very much for listening in, and do follow us on all podcast channels.